before 2022 March, RBI had mandated, before 2022 March, they mandated the microfinance company that they can charge a maximum interest rate spread of 10 to 12% over their cost of funds. Let's take a look at why, after the RBI circular, Manappuram market cap took such a huge hit. What was wrong? So, RBI, as we all know, is an age-old institution following rules as black and white. This helped India to build up such a reliable banking system. Any non-adherence to the rule is always scrutinized to the fullest. That is why India has such an incredible banking system. When it comes to the new age NBFC sector, a systematic black and white approach could easily destroy it, the whole sector, before the credit system is even set up. So, RBI, as a constant learner, is always developing new strategies because their main aim is to uplift credit growth in India. Okay, so while regulating any kind of misdemeanor by the lending parties. So, the rules and regulations are always changing. Due to various credit cycles, the demand of credit by the masses can only be satisfied by fast and loose approach. The difference between a bank or NBFC and a microfinance institution is based upon lending to a consumer. How they lend? It is the ticket size and lending duration. A microfinance lender lends at a small ticket size for a smaller duration, maybe months or sometimes even weeks. Hence, the yearly interest rates of 12 to 18% cannot be that is applied by banking sector cannot be compared with small microfinance units. Because see, the traditional bankers often see this high interest rate, which is beyond 20% sometimes. This high interest rate that is charged by microfinance unit is seen as predatory. But the microfinance lending comes up with its own drawbacks, such as principal at stake, political problems because due to waivers, climate change, as mostly the small ticket loans are provided without any collateral to small farmers or even smaller businesses. And these are done in tier 2 or tier 3 cities and even villages, even small villages. So now we should consider what can destroy a brand's image, because Manappuram is a brand. That when they are cheating customers out of their security, when they are not taking sufficient security when they are giving loan, or when they are using the loan that they get from other bigger NBFCs for illegal lending purposes, or they're charging higher interest rate more than what was assured on paper. Okay, but giving out small ticket loans while protecting your own NIMs, net interest margin, and charging higher interest rate while disclosing it all on paper is fair and square. So let me take you back to earlier. If we focus on the backdrop before 2022 March, RBI had mandated, before 2022 March, they mandated the microfinance company that they can charge a maximum interest rate spread of 10 to 12% over their cost of funds. If the cost of fund is, let's say, 10% for Manappuram, they could go up to 10 plus 12 is equal to 22% maximum. They could charge only 22% maximum interest to their customers. Giving relief to MFI segment, RBI removed this interest rate cap in March 2022. Hence, 2022 onwards, customers were charged according to the risk-based analysis and a risk premium was taken. And in future, with US Fed rate cut not in the sight, the cost of borrowing went up in 2023-24. So did the interest charged to the customers. Obviously, if cost of borrowing is going up, Adhering to market competitions, the interest rate increased beyond RBI's dream. Let's take an example. In case of Navi Finser, the spread goes from 9.9% interest to 45% interest per annum. During this high interest rate, climate, the lenders charging more interest to protect their NIMs will always be redlined by the institutions. Obviously, because they want good credit growth. They think these are all predatory things. What did RBI do to Manappuram micro lending? Let's see. See, the Manappuram subsidiary, Asirvad Microfinance, has been seized from any further loan dispersal. The company is accused of not adhering to RBI regulations while excessively charging interest rate. And the pricing policy in terms of WALR, that is weighted average lending rate. So the AMFL is allowed for now to carry out only collection and recovery processes while they can serve their existing customers. A suitable remedial action is required by Asirvad Microfinance, in which they will adhere to the guidelines and pricing policy of RBI. And after that, any review upon restriction placed by the RBI will be done by the RBI. So the review process would take few weeks. It might take few weeks. Until then, we can enjoy a cheap accumulation for such a long-term prospect. Finally, we got a chance to accumulate Manappuram Finance. So, okay guys, for such a detailed videos, please don't forget to subscribe to the channel. Thank you for watching. Have a nice day.